Traditional elite university networks are built on centuries of physical legacy and deep emotional ties. The campus creates a bond lasting long after graduation. To maintain that legacy, these institutions send out the same appeal for the annual endowment every single year. This model of annual giving is a one-way financial sinkhole, and universities are seeing lower returns as donor fatigue sets in. This animated map tracks the actual financial reality of those alumni bases. We are looking at billions of dollars in active, deployable private capital, but right now, that wealth remains isolated in individual silos, entirely disconnected from the broader network. The barrier keeping those nodes disconnected is structural. The moment an alumni network attempts to actively gather and deploy its members' wealth, they trigger strict SEC regulations governing the pooling of private capital. Managing unregistered securities carries severe legal hazards and financial liabilities. To avoid the compliance risk, institutional foundations take the safest route available. They stick to asking for passive, risk-free donations. For civic endowments to survive and scale, they need a structural bypass around that SEC bottleneck, allowing them to activate the dormant wealth already sitting inside their network. The Tripoli Investor Hub provides that bypass. It functions as a specialized informational architecture, avoiding the liabilities and structure of a traditional venture fund. Looking at this diagram, you can see how the regulatory bypass works. Instead of pooling money in the center, the software acts as a compliant data bridge. It simply allows two individual members to discover each other and transact peer-to-peer. When an alumnus logs into their organization's white-labeled portal, they experience an institutional-grade interface built on modern frameworks like TanStack Start and React 19. Inside the discovery phase, members browse active opportunities and review detailed financial metrics to evaluate high-scoring local franchises owned by their fellow alumni. Once an investor finds a match, they execute an allocation action, directing their private capital into that specific member's business without institutional friction. The engine driving this system is visible here on the Giveback Calculator panel. Every transaction embeds a giveback term, a contractual mechanism that automatically diverts a predetermined percentage of the funded business's future profits. By operating as a peer-to-peer informational layer, the platform legally converts a stagnant list of charity targets into an active, member-owned venture syndicate. This flywheel illustrates a deployed dollar. Step 1. Private syndication moves capital directly from investor to local business. Step 2. Operations expand, generating new EBITDA. Step 3. The giveback term routes profit back to the Treasury. Finally, the Treasury funds fresh scholarships, completing the circle. Those scholarship recipients graduate, join the active alumni network, build their own careers, and eventually supply the capital for the next wave of local businesses. A one-time donation ends the moment the money is spent. The giveback term creates a perpetual, self-funding economic loop. When you pull back from a single university network, the total addressable market for this model scales quickly. This multi-tenant dashboard demonstrates the architecture's flexibility. The exact same compliant, white-label platform can be deployed for university athletic clubs, national Greek fraternities, or private professional societies. Organizations use the platform's 8-dimension community impact analysis to track the real-world outcomes of their deployed capital, measuring metrics from job creation to network retention. This financial chart details the upside for the platform. Because the structure is high-margin software, the returns scale linearly. As member investment capital grows, recurring fee streams and scholarship payouts climb right alongside it. This technology activates static endowment cash into high-yield civic wealth networks that underwrite local economies. Aligning business growth with civic duty secures the financial future of the institution. To explore the mechanics under the hood, ask Donna to explain the compliance posture and giveback terms.